Hello everyone and welcome to today's webinar by Yes Securities, where we are committed to empowering individuals with the knowledge and resource to make informed financial decisions. From investment products to wealth management solutions, our goal is to pave the way for brighter financial future for all. One of our flagship product is chlorophyll, inspired by the pigment that fuels plant growth through photosynthesis. In the same way, our comprehensive stock strategies breathe life into client portfolios, providing the oxygen and greenery needed for wealth to flourish. Today, let's give a warm welcome to Mr. Nitin Bhakde, an industry expert with 25 years of experience in technical analysis. With a deep understanding of market dynamics across commodities, equities, and derivatives, he is well versed with the predictive analysis as well as reactionary analysis. Nitin is here to guide us through the intricate world of candlestick patterns. Join us as he demystifies these patterns offering valuable insights into their interpretation and application in market analysis. So, buckle up as we delve into the world of finance, guided by actionable insights and commitment to your financial well being. Let's begin our journey together. Over to you, Nitin.
Thank you very much. Good evening, friends. Yes, today's topic is about candlestick patterns. Before starting my candlesticks patterns, I just wanted to inform you that uh, whatever candlestick patterns I'll be showing you some examples today, and those are only for finding out an opportunity in the market. So basically, we will be using candlestick patterns to find out the trading opportunity. That is our objective. So in trading process, the finding out of opportunity only occupies the 20% portion of a total trade. The rest 40% is risk management, and the another 40% is about exiting the position. So when all these three uh, are synchronized properly, then only a trade becomes successful. So I'll today will just be taking you across. Uh, I'll be just introducing you to few patterns, which are basically a reversal patterns and offers us a good opportunity to enter a trade. It can be on wrong side or it can be on a short side. So let me just tell you a few things about candlesticks. So candlestick patterns are will be looking like this. There is a body which is known as a real body. Generally, the white candle or a green candle where the open is lower side and the close is higher side. Uh, the red candle or a black candle, there the open is on higher side and close is on lower side. So generally the candles looks like this. We will first talk about bullish candlestick patterns. So we'll start with this is an example of bullish candle where the open is always on lower side, close is always on higher side. This is the formation of bullish pattern, bullish candlestick. The first pattern, it is known as hammer, and it looks like what is now visible on your screen. I'll give you some example. Basically, hammer, when it occurs after a sustained fall, then it acts as a better entry point. I'll give you few examples. You must be seeing a hammer on your left hand side. That is a white candle. uh, I have marked it with a purple square rectangle, and thereafter, after that, there is a sustained fall before that hammer, and thereafter the hammer completes, and you can see the rise. This was a Ashok Leyland long back. The example I have taken are from long back period. Same way, another example I will show you. you see there is a hammer, a red color hammer, and you can see the rise from there. The only requirement is that there should be sustained fall before the hammer emerges. One more example of hammer. And every time this hammer comes, the price reverses. This is the beauty of this hammer. So our objective is to look for such hammers when the prices are falling. And whenever we see a hammer completed, the next day we can enter long position or start buying. One more example of hammer. So hammer is the basic pattern or one of the basic patterns which reverses the price after a sustained downside. One another important pattern is bullish engulfing. Here again we require a sustained fall, and when this pattern emerges, thereafter the price turns and start rising or moving up. I'll again show you a few examples. So this pattern is built by, it involves two candles. The first candle is a red candle. The next candle, it envelopes the whole previous candle, and actually it is engulfs the whole previous candle, and therefore it is known as engulfing pattern. Why bullish? Because the second candle closes on positive side, that it becomes a bullish candle. So this is the example. This is VIP position is in extreme left right side, reverse position of bullish, that is bearish. It covers the whole previous candle, and therefore from that point the downfall should have started. One more example of bullish engulfing. As I told you, the bullish engulfing involves two candles or two price candles. One which stops the fall and another which starts the rise. The rising candle should be bigger and should engulf the whole of the previous candle. Few more examples. This is metro bands. You can see the speed thereafter and the quantum of rise thereafter. These are all the daily time frame charts. Daily time frame chart. One more thing I must inform you is that the more the time frame of chart you go downwards, suppose 15 minutes charts or 5 minutes charts or hourly charts, the more you go on downside, the more unstable the chart will become. The more you go on higher side, the more chart will be more, I mean to say that weekly chart can be more powerful than daily chart. Monthly chart will be more powerful than weekly chart. The signals, those on higher time frame charts, will give you a bigger rally. The more you go on downside, the rallies will be shorter. One more bullish engulfing pattern, Kotak Mahindra, and the price started around 1630 and we went up to 1890. Adani Transmission, bullish engulfing. From May onwards, a sustained fall is there. Bullish engulfing emerges, and thereafter a small sideways period, and the stock starts moving. It almost, I think, doubled. This is one another bullish pattern. It is known as bullish Harami. Actually, candlestick is started from Japan. So this Harami word is a Japanese word. Basically, those who use bar charts, this is type of an inside bar. It is also combination of two bars. One is mother bar and another is inside bar. So the mother bar closes downside. It is a red candle, implying that the prices are falling. The next day, suddenly a gap up opening happens, and at the end of the day, the close is in positive, but the candle remains inside. This is reverse of, you can say, engulfing. So one needs to wait for the cross of high of the second bar. Once the cross happens of high of second bar, then the up move starts. I'll give you some examples. Here you can see a bullish Harami. The high is crossed of the second bar, and thereafter 1, 2, 3, 4, 5, 6. In 6 days, the prices are moving up, and it moved from almost around 3,200 to 3,450 rupees, almost 250 rupees gain. I think it may be around 7-8%. One more example, and thereafter, once this bullish Harami is completed and his high is taken out, then you can see the rally. Poonawalla FinCorp started from almost around 225, and when this snap was taken, it was still rising at 295. Bullish Rami. So these patterns give us a good signal that prices are turning. They are ready to move up, and gives us a good entry point also. Piramal Enterprises. Another bullish pattern is morning star pattern. This pattern now involves 3 candles. The first candle should be red. The last candle should be green. The in-between candle can be bullish or bearish. The day 2 candle has to be gap down, and then and the third candle should be gap up. This tells us that bears have become powerless now, and bulls have taken over the power. I'll show you a few examples. This is Blue Dart Express. This is one of the most powerful pattern. It rarely occurs, but whenever it occurs, it gives a good move thereafter. It is known as Morning Star. It is a sort of trend changing pattern. The requirement is like previous, there should be sustained fall, and thereafter this pattern should emerge. One more example, Gujarat Pipao, Morning Star, Gujarat Ambuja Export, Gujarat Alkali, a book example. There is a gap down, then there is a gap up in third candle, and the rise starts. One more Morning Star. The 3 candles, this is 3 white shoulders. These are 3 bullish candles continuously making one after another. And this type of formation changes the trend. it changes the trend of that particular time frame. I'll show you examples. You can see here three white candles, successive three white candles, and the previous trend gets changed here. It has now turned up, and you can see the three bullish candles almost completed around 650, and when the snap was taken, the stock was trading around 745. ITC, three white soldiers. Here again the big three white soldiers. There is a particular problem with this pattern. Here the stop losses are very wide, because the stop loss will be always be the first candle's low. That is the only problem with this pattern. But generally it gives a very nice signal, and starts the good uptrend. Again, three white soldiers on JSW Steel, Hinduja Global. Now, bullish piercing. This is another bullish pattern, which turns which makes the price to reverse from negative to positive direction. I'll show you examples. There is Zomato, and when this snap was taken just few days back only, the bullish piercing happened, and thereafter price started rising. It requires the first candle to end in negative, that is red. The second candle should open gap down, and thereafter it should rise and at least reach till the 50%, at least cover the previous candle's body by 50%. That is the basic requirement. And once these requirements are fulfilled and the second candle's high is taken out, the up move starts. So one can enter on taking out the second candle's high, whereas the stop loss will be low of the second candle. Now one can ask a question, when these examples are showing such a good nice moves, why we need a stop loss? So I must tell you that technical analysis is not a perfect science. It is not a mathematics where 2 plus 2 will always become 4. And the news flow, sentiment flow, and many other things that affect the sentiments of market can disturb these patterns. And in that case, we should have a stop loss to limit our losses and to safeguard our capital. One more example of bullish piercing, where the price first candle ended in negative, the second candle opened gap down, then went up and covered the previous candle by more than 50% area, and thereafter the up move started. One more thing I must tell you, that whenever the price turns, it is not necessary that it will start with some or the other candlestick pattern. The prices can move in V shape, U shape, anything. But whenever these patterns occurs, it gives us a good insight into what we should expect next. Another bullish piercing, Shriram Transport, Shri Cement, bullish piercing. If one goes on scanning the charts, one can see these patterns regularly occurring. And nowadays, even the there are softwares where you can code, or there are already coded, and you just have to scan it and they can give you where this pattern has occurred. Metastock has such query setup, where if you run that query, then it gives you a list of stocks where these patterns have emerged. These are the basic 5-6 bullish reversal patterns, and the reverse of this is bearish patterns, which tells us the prices are now moving downwards. So if one had already bought, don't look at this bearish candlestick to book. uh, these setups are for entry of a trade. That means if you are using bearish candlestick patterns, then you are entering a short trade. It is not same as booking the earlier profit, earlier long trade. I am talking about entering a short trade. So there are bearish candlestick patterns also. You remember a hammer was there when it comes into around bottom, then it starts up move. This is a hanging man. It also looks like a hammer. The only difference is this comes at top. If it if this pattern is seen at top, then it is called hanging man. If this type of pattern is seen at bottom, then it is called as a hammer. I'll show you the example. This is the hanging man, and thereafter there are two hanging mans side by side, and thereafter the price started declining. On left hand side, if you can see my cursor, there is a hammer here. This hammer started a up move, which completed with this hanging man. One another hanging man. This is the hanging man. It is coming around top, and thereafter the price starts declining. You can see this here also, a hanging man, and thereafter the price starts declining. One more example, Oberoi reality. This red hanging man, same formation, if it comes around bottom like here, then it is known as hammer. It starts rise, this starts fall. You, you remember piercing formation, which was a bullish candlestick pattern? The reverse of that is dark cloud cover. Here, the first candle is bullish candle, then the prices opens gap up, and thereafter they start sliding, covers 50% of the body of previous candle, and closes in red. This is another type of reversal. I'll show you few examples. NLC India, at top a big white candle took place, thereafter price opened gap up, went up, and then started sliding, covered the 50% area of the previous candle, and thereafter the slide started. So it reversed basically the previous uptrend. One more dark cloud cover in Maruti Suzuki. Mahindra Holidays dark cloud cover. There is IndusInd Bank. All these are daily charts, daily time frame charts. So using these candlesticks patterns, one can take a trade of next 7 8 days, 5 6 days trade. One can easily take, and one can continue with if trend favors, then one can continue also. PI Industries, dark cloud cover. Previously, I told you about bullish engulfing. The reverse of it is bearish engulfing. The earlier one starts a up move, this one starts a down move. I'll show you the example. There are two bearish engulfing on polycap, and these are not these engulfing patterns have not occurred before this current fall. This is an old chart. Pyramidal Enterprises, a good bearish engulfing. The requirement is only that the previous candle's whole body should be covered by body of the next candle, and the first one should be white, second one should be red. One more bearish engulfing, Pidilite Industries. This is basically useful for future traders who generally uh, can sell short also. One who deals in equities, purely equities, these reversal patterns can help to exit the position if holding some longs. Bearish engulfing in Petronet. At the bottom here, you can see a previous bullish reversal where I told that inside type of behavior is seen. The first candle is big, the second candle is inside, high is taken out, and thereafter the up move starts. The bearish engulfing, and thereafter the down move starts. One more bearish engulfing on LIC housing. Here is a hammer visible, thereafter up move. Here those piercing candle, inside candle, and then up move. Just like bullish Harami, there is a bearish Harami also, and it turns the price towards downward. Examples. This is bearish Harami. The inside bar comes. Here there are many inside bars. The mother candle is this. There are many, but it completes the bullish Harami. One has to go short below this first candle's low. The first inside candle. One more bearish Harami. Ultratech Cement must have fallen after that. Titan, bearish Harami. You can see a small hammer here which started the rise. Again, one more bearish Harami in Tiger Tech. Since I am showing you example, but I must warn you that these patterns sometimes behave very differently. Rarely that happens, but sometimes it can happen because of news flow or some event or some other reason, and one has to use stop losses strictly. The earlier one I showed you, morning star, which generally starts the up move. This is evening star, which generally starts the down move. And the examples here are Amar Raja battery, clear evening star pattern. I think trading view also have some code where they can you can one can scan and can find out these patterns. I have not used it, but somebody has told me. I know for Metastock, but in TradingView also, which is a free software, there is a provision to find out these patterns. One more evening star on Voltas. Glenmark Pharma. It basically changes the trend. A rising trend is changed after in downtrend after emergence of these patterns. One more instance in these towers. Three black crows. There were three white candles earlier, which starts the up move. These are three black crows, which starts the price downhill. Cipla has shown in January 2022 these three black crows, and the price almost fell from 960 to 860, almost 100 rupees. A 100 rupees fall on a daily chart is a big fall. Three back close on Coforge. Colgate Palmolive. You can see the speed of fall also thereafter. Dr. Lal Path Labs. Three back close and the fall thereafter. So these patterns work very nicely and they give us a good insight of future price. Also, it can be used for entering a trade and defining the stop loss. One more example. Now, till this time, I have shared the knowledge of bullish and bearish candles. There is one candle which is known as Doji. It is not a bullish or a bearish candle. It does not belong to any one single group. If it comes on the top, it can start a slide. If it comes at the bottom, it can start a rise. And here are the example. There are three types of dojis, basically. Four types, sorry. One is common doji. The open is generally same as close. Then there is a long leg doji. And there is a gravestone doji. There is a dragonfly doji. And all these dojis, if they come at an appropriate place, then they signal a change in direction of the price. So you can see her doji here, and it has changed the direction. The direction was earlier up. After this doji came, is low is broken, and thereafter the price direction has changed to downward. This pattern is an inside bar type pattern, but there is one more doji here also. Its high is taken, and then you can see the direction of price changing to upward. Here is one more doji. This is a normal type of doji, but it changes the direction of the price. Here again, these these are not perfect dojis, but it is very near to doji formation. This is long leg doji. One more example of long leg doji on Tata Coffee. Another doji is here. If you are seeing my cursor, this is Dragonfly doji. It starts the downward price. This is a grave stain doji. If the low is taken out and the downside continues. There are two long leg dojis, Aarti Industries. This becomes a very powerful pattern. If his high is taken out, then price, the probability of price moving upwards increases uh, very highly. Like doji, there is a one another pattern known as spinning stop. This is this does not belong to bearish or bullish. This is a normal spinning top, but whenever it comes, it gives us insight that there is a probability of change of direction of price. I'll show you a few examples. Whenever a spinning top comes, its high or low becomes very important. If a trend is moving up, if the stock is in uptrend, and in between if a spinning top comes and its low is taken out, then we can say that the direction of price has changed. But if its high is taken out, then we can say that the continuation of trend will happen. So it generally doesn't give us any signal, but gives us insight that what we should expect for next few days or few months. Here is a spinning top, example of spinning top. The trend was down, it, it became up. The spinning top's low was taken out, and the price started declining. Here, thereafter, a hammer can be seen, and a hammer has started the price moving upward. One more example of spinning top. I hope this examples has must have bring some clarity, and for reference, if you require this presentation, then you can write to Alpesh. He will provide you with this. Uh, if there are any questions, please feel free to ask.
Nitin, sir, we have one question from Rajesh. If hammer made in bottom, then is it necessary to have one another bullish candle thereafter?
Well, if hammer takes place at bottom, one has to wait for the next day, and one can enter long position only on cross above the top of that hammer, that particular hammer. Once the price crosses above that hammer top, then only one should buy. So it is sort of a breakout trade.
As there are no more questions, we will conclude this session. So, as we conclude today's webinar, I want to extend my sincere thanks to Mr. Nitin for sharing expertise and insights with us. Remember, at Yes Securities, we are here to support you on your financial journey every step of the way. Stay tuned for future webinars and updates from Yes Securities. Until then, stay informed and stay inspired. Thank you for joining us today, and we'll look forward to connecting you again soon. Thank you.
Thank you.